All right. Hello, everybody. Welcome to our panel here that we'll be starting now. I ask you to get your food silently, please, so we can have a conversation about non-custodial and custodial wallets and their evolution, their benefits and trade-offs. And let's start with introductions. So my name is Kemal. I'm co-organizer of the Adopting Bitcoin conference in El Salvador. Also helped Patrick here and Herman in Cape Town. So we have 3 Adopting Bitcoins now. Working at the team at Galloy, where we are developing open source Bitcoin banking software and operating the Blink wallet, which runs on that software. So we've been running it since 2020. We were the first company in El Salvador. And the custodial Bitcoin wallet of choice of many communities that are using Bitcoin as money. And I'll pass it on here to Jos.
Yes, thank you very much. I'm Jos Lazet. I'm the co-founder and CEO of Blockrise, a semi-custodial platform, which we will dive into all details about it today. Founded in 2017, been into the space since 2013, and got a DNB registration in the Netherlands, so I'm a little bit more on the compliance and regulatory side as well, and hopefully able to give some insights from that perspective here.
My name is Jesse de Wit. I'm a Lightning developer and I work for Breeze. And what Breeze does is we have an app for non-custodial Lightning. And next to that, we're making it very easy to integrate non-custodial Lightning payments into your own application. So we've got an SDK, software development kit that helps you with that. Yeah, so basically I'm a Lightning developer with a specialism on Lightning service providers side.
Hi, my name is Moritz. I work at Albi. Albi is basically your companion for all things Lightning on the web, in apps. Whenever you want to pay with Lightning, you can use Albi. We have, like from a consumer perspective, we have a managed wallet. We also have a self-managed wallet now. So like really both sides. You can easily connect them typically to the Albi browser extension, to mobile apps or to any other web apps and mobile apps if you want to enjoy in-app payments, but there's also a developer side of Albi. So there are, whenever you want to build such apps, you can use one of the open APIs that we build into our products like WebLN, Nostr Wallet Connect, and help with Bitcoin adoption there.
Awesome. So we know who's sitting here. Let's get into the topic. I'll start with something that Moritz just said. He said managed and self-managed. Maybe let's talk a little bit about terminology to get things started. So we've heard from regulation side, like something like hosted and self-hosted. I just said custodial, self-custodial. And you just mentioned managed and self-managed. Like, what's the difference? Like, does it matter? Which terminology should we be using?
Yeah, so I think the term custodial, it already says something like somebody takes custody over your funds, right? And there's the term non-custodial, and that means that somebody does not take custody over your funds. So if you are holding your own funds and you have the control over your own funds, you wouldn't say you are non-custodial. You would say you are self-custodial because you hold the custody over your own funds. But if you're using a service, for example, that provides a service, but that service doesn't take custody over your funds, you would call that a non-custodial service.
Yeah, and I think like good to add is here that it used to be much more black and white, I would say. You know, it was either it's more on the self-custodial, non-custodial side, or it was a custodial service. And now you see like lots of developments on like more hybrid solutions, like more warm custody type of solutions, which depends on the application, the use case might be very valuable as well.
Okay, so I have a question for the audience. Everybody raise their hand who is holding their own keys. Okay, that's good. And who of you has used the custodial wallet? Well, there are a couple of liars out there, and I'll explain briefly why. Because I would make the argument that actually, until Bitcoin, all money was custodial. What do you say to that?
Well, Well, not necessarily, right? I mean, cash is not custodial, and it's not maybe not hard money like Bitcoin is, but at least it's not.
Well, the
custodial.
Central Bank of India disagrees. They can just phase out certain banknotes, and then they're worthless. Like, what does it really matter that you're holding a banknote, a piece of paper that they put some ink onto it?
Yeah, and that's definitely true, and it's the question then how many other people will adopt the same currency that you're holding, right? And it's the same with Bitcoin. If nobody is using Bitcoin anymore, if everybody phases out to another system, then also Bitcoin would be worthless. I don't think that's going to happen anyway, but so it depends on how many other people are holding the same currency as you. But a note from, say, a custodian, that means a very different thing, because then you would have a claim on your Bitcoin with the custodian, and then the custodian would hold the Bitcoin on your behalf. So if you're interacting with the custodian, you are not directly using the Bitcoin yourself. The custodian would be using Bitcoin for you, and you interact with the custodian, basically.
Yeah, but I think that custody or custodial services are not per se bad. Like they have seemed to prove helping on adoption. Like without custodial services, I think that we would be in a total different space now. Like it is vital for adoption. It helps with usability, and of course we see developments that is making self-custody a lot easier. But still, for especially the mass, it's necessary to bridge these gaps and come up with custodial solutions before moving in. I think they can collaborate and work together even.
Question to you, Moritz. You had experience running Albi. It was in the beginning, I think it started out custodial, but there were always options for knowledgeable node runners to connect their own nodes. But you have experience running a custodial service and being the custodian of users' funds. So what is your observation? Like, what kind of users, like, why did users choose that solution instead of connecting their own node? Like, can you give a couple of insights from being a custodian for other people's Bitcoin in the past?
Now, they choose Albi or our Lightning account because they want to do something with Bitcoin, and they don't care about the keys in this moment. They have a goal in mind, and the goal is not to hold the keys. The goal is to spend it, because we are mainly a spendings wallet. That might be different with a savings wallet, though, and also because in a spending wallet you have max a couple of hundreds of US dollars, but that's it maybe. So that's also way less risky. And yeah, but that's the main reason, right? So it's not that I have the motivation to create a passphrase, save my seed somewhere, and then each time I type in my password, I'm afraid that I cannot unlock my wallet anymore. So and that's just a lot easier if I just can authenticate with my email address, and if I forget my password, I can say, hey, Albi support, please help me, and then we do that. So it's from that perspective, it's from a user perspective, yeah, I can agree that for now, or starting off is easier as of now.
If I may ask you a question, so how I see it is that you decide on your custody type of setup based on your risk tolerance and perhaps on the amount of funds that are exposed through custody to non-custodial. What is your view on, let's say, flipping it the other way around and savings in a custody solution? Is there room for it, or do you think it will never be that case at all?
There's definitely room for it. I'm not sure if it's the ideal one, but I mean, if you look at all the banks today, right? You have a savings account there. You trust them with your money. I think people don't care about that. So, or at least, I think what we need to do is the UX needs to be at least as good as custodial solutions for people to adopt non-custodial solutions. Because unfortunately, only for a minority, they really care about holding their own keys. right now.
Yeah, it's a hard thing as you said there. You said like at least as easy as custodial solutions, and of course, non-custodial solutions, they will never be easier than a custodial one, right? You will never be easier to use than a custodian, but
I disagree there.
Yeah, how would you?
I gave an example before, and I think today you, when you use a custodial wallet, the least amount of these custodial crypto wallets are regulated today. So they are actually, there's some regulatory arbitrage where they benefit. But imagine at some point you probably will need to fill out each and every time you send something to someone, for example, one SEP of 21 sats to someone, and then you need to define who this person is in order for the wallet operator to do some travel rule, follow some travel rule protocols. So this might come up. I really don't hope so, but this actually might come up, and then you cannot say that UX is great in these wallets.
I must say I agree with that. And there's also another aspect to that, and that's like, for example, in Europe, or at least in the Netherlands, we live in this ivory tower where you can have a lot of trust in institutions, right? Our banks are great, and you just know that if you put your money in your bank, the money is going to be safe. And now, of course, you've got all these Bitcoin companies. They're also building custodial solutions, but people may expect the same kind of risk tolerance in a Bitcoin company as in a bank, but they're not regulated in the same way. So even though you feel like your funds are as safe as they are in a bank, they probably aren't, because they're just not protected the same way.
So we heard a couple of benefits already mentioned for custodial services, like the ease of logging in, account creation, and recovery. Moritz is making the point that in the future, maybe with regulation, it might even be a UX disadvantage to be custodial, because the regulation will be overburdening these solutions with requirements that will just create a really bad user experience, and self-custodial solutions might be safe from those UX requirements, hopefully. So that could be a great incentive to just learn how to hold your own keys. Let's talk about risks and problems of custodial. I mean, there are examples in the history of Bitcoin, I think, starting most prominently with Mt. Gox, where a lot of Bitcoiners early on didn't hold their own keys or left it on an exchange. Not your keys, not your coins. Mantra was not as popularized yet, I guess, at that time. I think it was in 2013 or 20...
I think earlier even.
Even earlier. Yeah. So a lot of Bitcoiners early on put their Bitcoins to a custodian and entrusted them, right? And there was a learning process, even in the Bitcoin community as a whole, that basically if someone can hold on to this pristine, super scarce asset and they can run away with it, they will probably do it, especially if there is no regulation and stuff like that. Like the environment of company development was also, like Bitcoin company development was, I would say, less regulated. There were no clear guidelines, no audits, and it was pretty much Wild West at that time. So the counterparty risk of the person that is holding your Bitcoin running away is one risk. What are other risks?
No, I mean, to add on this, I think it's very important that exchanges are still, or brokers, they're still a vital part of the Bitcoin ecosystem. And to a certain extent, it will always be custodial or for a short amount of time. So I do believe that we need to rely partly on regulation in order to improve these systems and make it more secure, make it better, because you know, the value creation of Bitcoin is partly because it's being traded for a certain value, at least as of today, as long as it's a tradable asset. So yeah,
and we have a very prominent example now, a huge custodian that's coming into the market, basically, or 9 of them in January earlier this year. The ETFs are a custodian of Bitcoin. They're holding lots of Bitcoin. What's the concern there of that happening? Moritz, you want to take it a shot?
Yeah, so from one concern from an ecosystem perspective is, in my point of view, that we get used to this to custodianship too much. So we actually have Bitcoin, freedom money, everybody can really own, really own Bitcoin, right? And compared to fiat also. And that we just get too much used to relying on custodians when we transfer Bitcoin. So I think this is more like a general ecosystem point of problem that we might face.
Yeah, maybe the counter side, and maybe for yes as well. So non-custodial solutions are also quite challenging to a certain extent. I mean, I always ask, like, what is there even a digital solution we can think of for key storage? There's none. You need to always go back to physical key storage. Multisig is very complicated for most users, and it requires a lot of work. So this is also quite a risk for a lot of people. It's a single point of failure. There's exposure risk, risk exposure. There's hardware wallets that might fail or get corrupt.
Yeah, I'm not in the party of the idea that keeping a seed is hard. I mean, keeping a seed is easy, in my opinion.
But would you agree that it's a novel concept?
Yeah, it's a novel concept, and tools have to be developed to make that to make non-custodial easy. And the main goal that we have to drive towards, and that's a call for every developer out there, basically, is to make these standards easy to use and make them standards, right? Because everybody is inventing non-custodial solutions, and eventually you will run into edges where your non-custodial solution is possible, and you will diverge, or eventually, if multiple people are building the same kind of system, you will sort of converge on one answer for what that non-custodial system should look like. And these should be created as standards, because if you would be using even a non-custodial app from one party, for example, and the party disappears, or your app cannot be found in the App Store anymore, maybe you won't even be able to recover your funds as well. You would have to compile code, and that's just too hard for a regular user. But I don't think holding your keys is hard. But another hard aspect of non-custodial is the economical constraints. There's just a hard limit on the Bitcoin blockchain, which is the dust limit. And there's a certain size of a UTXO that's just uneconomical to use. So you have to hold a balance over a certain limit on Bitcoin. And even if you're building non-custodial layers on top of Bitcoin, if you have some kind of unilateral exit on this layer, you're bounded by this constraint of Bitcoin itself. So there's a definite, clear edge there that you cannot cross. The dust limit is sort of fixed.
That's a great segue. Let's get into a little bit of the weeds of what does it actually require to hold your own keys, and can really everybody do it? I think this has been a discussion coming up in the last 2 years a little bit with the clogging of the mempool with non-monetary transactions, especially driving the on-chain fees up. As you may know, to open to use Lightning self-custodially, you have to at least open one channel. So that's one on-chain transaction that you have to do up front to be able to transact in Lightning, right? And if that cost is high, what happens then to people in different income levels or price sensitivities? Does it become cost prohibitive for certain people to use Bitcoin? Is that a problem that we should be solving for? Is maybe just an entirely different question that we're not going to get into it right now. But Jesse, you want to maybe run down what does it actually really require? We sitting here in Netherlands earning a cool 4,000 euros. One transaction is maybe $1. Sounds like everybody could do it, right?
Sounds like everybody could do it. Yeah. So I just talked about that dust limit, which is the clear limit. So if definitely if Bitcoin would go to $1 million or something, then the dust limit may become a significant amount, definitely for poor people. And so you would have to build layers eventually that share UTXOs. I see that as the only eventual solution. And these people would probably not even be touching the Bitcoin blockchain then. There's no way to do your own transaction as an individual that doesn't have a lot of money if the fees are eventually high, which just should be at some point. So yeah, there's the economical constraint there. So we have to build these layers. And there's a point there also for custodial versus non-custodial systems, because right now it may seem like a very good solution to build a custodial system because we are bounded by these constraints now, right? We want to be able to onboard people with pennies on the Bitcoin network, and how can you do that today? Well, you can do that with custodial systems, or you can do that with eCash solutions, which are sort of more privacy-focused custodial systems. But the problem is that then these very smart people that know where the constraints are, they are going to build this custodial system, while that brain power should really be focused on how can we build new systems.
There is still a lot to be. A lot of room for improvement, you're saying, that should be explored, and the mind share in the developer community should go into solving these problems before we start cutting corners. Is that what you're saying?
Yes, that's what I'm saying. And it's hard, and it takes a lot of time and effort, and you may not even get rewarded by it, but the call is to try it anyway, basically. Yeah.
If I may ask you, on Lightning, running a non-custodial Lightning solution, it requires quite some technical challenges as well, and not other than just doing the on-chain transaction, but also setting it up. How do you see this future of improving on this technical side of running Lightning non-custodial on your end?
So in the last 5 years, I think there's already been quite some improvements there. I think apps like Mutiny or Phoenix and Breeze as well with our SDK, but with the Lightning Service Provider model, we've already got, I think, quite a good solution for onboarding people in that direction. And yeah, there's two pillars, and one of them is based on reliability. Basically, the Lightning payments just have to become much more reliable. And the other one is on usability. Basically, yeah, it has to be very easy to use. Yeah, and we can keep building on that. And also, there's an important thing is offline payments. So one spec that's being worked on is async payments, but it's got very large dependencies. Yeah, many dependencies. And the problem with Lightning today, I think that one of the biggest problems is that the sender and the recipient have to be online at the same time in order to send a payment. And yeah, we have to work towards making these asynchronous, so the sender and the recipient can be online at different times. Yeah, but we need quite a few dependencies before that, so it'll take a few years.
So we've mentioned it a couple of times already, like Mutiny was mentioned. Jos mentioned a little bit that there's also a spectrum now emerging. I think with the high fees and the observation that a lot of the Bitcoin adoption that is coming from people that are not as knowledgeable about Bitcoin like the Dutch Bitcoiners are. So that's really great to see. There's adoption going on in places like El Salvador, like South Africa, where the degree of Bitcoin understanding, Bitcoin best practices, Bitcoin knowledge is not so present. So for example, here and Herman mentioned this in his talk as well, there is no problem so much with inflation if you compare it to Turkey or Argentina. There is a working traditional payments system. What's really the pressing need? There is none. It's not a pressing need really, like people in the global south have to use Bitcoin that you have here. So it's driven by a lot of understanding. So when that understanding is not there, I think what we're seeing is that people just want it to work for them, and they want to go through not too many inconvenient things, not too much upfront cost, and just see that it works for them and it's not scamming them, and go from there. And so we're seeing that a lot right now. And there are also solutions like Liquid, for example, which is somewhere in between the spectrum. It's a federated system. Some call it still a bit custodial. It's federated, in my opinion. Then there is Fediment. I think we can all agree that Cashew is custodial. I mean, there's no doubt about that. But Fediment is also like somewhere in between the spectrum. How do you see like these solutions? What role do they play? And how should Bitcoiners think about them, and where to employ them best?
I think one of the most important factors that is often overseen is that once you are considering a custodial solution like ETFs in America, the custodial side of like which part of the spectrum is one, but two is the verifiability. And what is the most common usage of custodial solutions like exchanges is that it's an omnibus account which is not verifiable at all. Or it's a Merkle root proof, which is based on a paper audit that you have to trust the paper audit, and then it can be a Merkle root proof, but I mean it's always outdated, and you are not able to verify your own funds at all.
When you say verify, are you talking about that the custodian actually has the Bitcoin that they say they have to their users?
Yeah.
So it's basically that's the verifiability you're talking about,
yeah.
right?
So from the Blockrise perspective, we try to build a solution where it's it's custodial, but the client has signature proof that he's the only one that has access to their funds. But at least on the blockchain, they can verify with their own authorization key that the funds are theirs. So even though you depend on Blockrise, we help you build the transactions. You can buy and sell or whatever you want to use, but at least you can verify at any time that your funds are on the blockchain. Which again, in the idea of this conversation, we are a lot more focused on non-custodial. But if you are, if you don't want to have all the technicalities, I think there's so much room on the custodial end of the ecosystem which can be improved. And of course, there's on-chain fees, and we need Lightning integration to be more efficient with transactions. But the custodial part of Bitcoin has a lot of room of improvements as well. I mean, there is no proper audits of, for example, the ETFs, which is a terrible usage, I think, for Bitcoin storage. But
so the point that you're making, basically, I think it's an important one, is like you talked about Blockrise. It's a custodial offering, but it offers the customer, in that case, not a user, the assurance that basically there is no paper Bitcoin, right? Is that?
Yes, correct. So I always see it as two layers. One is, okay, who has the keys? And it can be like a non-custodial key, it can be custodial, like that's one layer. And two is like on what level is the segregation of the assets. And most institutions, so again, coming from an institutional perspective, they only segregate on institutional level, not on retail, not on customer level at all. And that's the one thing that I said, okay, in order to improve this type of setup, we should segregate on user level. Of course, there's like the dusting is the limits, the minimums is a big problem. We need layer 2s in order to make the service work for smaller accounts. But in general, I mean, coming from an exchange where you want to hold an X amount of funds for a certain period and you cannot verify it, at least you should be able to verify it to a certain extent.
So, I mean, we touched on another problem of custodial, of holding your Bitcoin with a custodian. We had the rug pull risk, the counterparty risk. This is basically the paper Bitcoin risk, so to say, where, if you're putting your Bitcoin to a custodian, it is possible that that Bitcoin is promised to someone else as well, and effectively the supply limit is inflated and the Bitcoin price is suppressed, like we saw with FTX, for example. So, and you mentioned like with the ETFs also. I had a look. There's an app called Hoseki app. They're doing like proof of reserve stuff. Only one of the 9 ETFs, actually, bitwise, is basically proving on the blockchain that they have the Bitcoin that they say they have. So every day at the end, when the inflows are done, they report it. And on only one of the 9 ETFs is basically really showing the address to the world. And all the others are not. And that ETF is not the one that has the biggest market demand. No, which is a little bit puzzling to me, because if we are, as Bitcoiners, so concerned and with the 21 million limit, like, why is that ETF that is doing it properly not getting the most market demand? Do we first have to get wrecked by paper Bitcoin so the market demands best practices like proof of reserves?
Well, I mean, like, Bitwise was the one, and they got heavily criticized because they were using legacy addresses and they were a bit ridiculed. They actually upgraded to Bech32. But the bigger thing is that as a user, as a holder of the ETF, I cannot verify that in that bunch that is on the blockchain, my part is in there. It's a daily settlement, for example. So there's one transaction per day going into a wallet of what they publish the address of. But I cannot verify if my fund is part of that chunk that I'm seeing on the blockchain. So yes, it's good that, you know, at least the total amount and the total amount, they match. Great. But it's nowhere near that. I think that at least like the institutional ones, that like last week they published the filings of the biggest institutions. At least they should be segregated and be proven that at least the larger institutions can verify that their ETF funds are actually on the blockchain.
I mean, it would be lovely if we get there. I mean, we can start small with legacy addresses showing what they say they have in aggregate from. I'm fine with that. I think one topic that relates to this, El Salvador has been saying they are buying Bitcoin. There was a lot of criticism since the Bitcoin law that, yeah, where is our Bitcoin, Nayib Bukele? And they were asking him also to basically prove that the Bitcoin is there. They finally did it in collaboration with mempool.space. So I think it's really great example of transparency that all public officials should be following in always and everywhere. It's great to see it being done with the treasury of a sovereign nation.
I want to touch on something else. You just Please. Said, like, when we started this topic, you just said, like, yeah, why would I even use non-custodial? Because it's hard and it costs money. And I just want to touch on that a little bit, because I saw, for example, in the Tornado Cash ruling, as probably people know about this Tornado Cash ruling, there was a mixing service on Ethereum. It was non-custodial, and yeah, the guy was arrested, basically, who created this service. And in this court ruling, it said, it had one sentence that said something like, these privacy systems are only, what did it say? It said, these privacy services, they can enable authoritarian regimes to escape sanctions. And why would you even build a privacy solution? It will only assist criminals, right? But there's a very different side to that, and I want to highlight that now with the non-custodial, because in the world there's 59 authoritarian regimes. Right, and if you want to run an opposition for an authoritarian regime, what the authoritarian or the dictator will do is, first thing it's going to do is it's going to cut your ties with money, because if you don't have money, you're not able to run a campaign. Yeah, they will cut your ties with money. So if you're running if you got your money in a custodian or in a bank, they will be able to cut off your accounts, because the people have to comply to that, right?
I mean, we've seen a huge example of that after the Russia-Ukraine war started. Russia had 600 billion worth of assets in dollars sitting in Western bank accounts. The guys have nukes, right? They have the second biggest number of nukes, and still they were rug pulled by the West. So yeah, exactly. Because the West was their custodian in a way. So
yeah, and in any of these regimes, if you try to run an opposition, not only will they cut your ties with money, so that's one thing the dictator will do, but also any donator that donates to this party, any donator is at risk of being arrested, or of being maybe if it's a really bad dictator, which did happen in countries like Venezuela, or they arrest them, but they even torture them. People get killed out of just giving funds to the opposition of a dictator. So an important part, and why these people are also actually using Bitcoin and using these non-custodial tools, is because not only can the dictator not block your funds, they can also not see who's giving you the funds. And I think these are important aspects, and they actually enable democracy this way. And I think that's an under-highlighted aspect of financial freedom, and especially in the Western world, where you're able to trust institutions. Yeah, the financial freedom is what enables democracy. And as we move more and more into these regulations and trying to banish people from using accounts for different reasons, yeah, it has a risk on democracy. And one thing I want to say with that is also laws in countries, right? They may prohibit you from doing a certain thing, but these laws can also be changed. So if you don't agree with a certain law, you should have the right to form a movement that uses money in order to try and change this law, for example. Right? They're just in politics. These laws are created. So
that's a great and compelling case for why people should hold their own keys and be independent, because a free society relies on free individuals who are not coerced with certain dependencies, especially an important dependency like money that we need to survive and to feed our children, right? People can be coerced if someone else has control of your lifeblood, if you will, like, right? Like, we run on that stuff. Like, our entire economy works on it. And yeah, if you want not to be pressured into a corner, then you should try to be sovereign. And that's, I fully agree, it's a compelling case. We have 5 minutes left. I also want to give the audience a couple of minutes of opportunity for questions. But maybe let's start wrapping it up from the side of Moritz. What are your hopes and your realistic outlook for custodial and non-custodial solutions in going forward?
Yeah, absolutely positive, especially because if we look at, for example, the Bitcoin Lightning app ecosystem today, actually there are also almost all of them are custodial. And that's because there are no very good tools that make the life easier for them. But now, over the last years, we've come up with standards like WebLN, for example, Nostr Wallet Connect. Breeze SDK is a great product there. So they can... Green light. For example. So there are these things, there are quite nice developments, and that make me like think very positive of the future of Bitcoin applications and wallets in general, because it's nice to build an app until a certain scale, right? Until you are not really visible, but actually at some point you are visible to the regulator, and then they will come and say that's not going right. But if you have an answer to that, with technologies like this, with protocols like WebLN, Nostr Wallet Connect, where you can build nice non-custodial payment experience where users directly pay on each other and you do not have to accept customer funds, then actually I think that's another way where we see Bitcoin apps can scale beyond a certain limit.
I think it's going to be a lot easier and easier and easier and easier to build non-custodial, self-custodial apps. People are just going to lay the groundwork to make this easier and easier. And it's going to get harder and harder and harder to run a custodial system because you will be regulated, and it's going to be very hard to start a business. It will cost a lot of upfront money. You have to do compliance. You have to hire a lot of people. So because of that, I think people are going to build non-custodial systems, apps. They're going to build non-custodial payments into their apps, and basically that way they'll force their users to be using non-custodial in the end. So I think if we just continue on this path and just make it easier and easier to build non-custodial systems, I think eventually I have a bright future outlook that way, and it's a bit of a hope, but it's it's a bright future outlook if we continue on that path.
We're working to get there.
Yeah, I think that the whole cycle needs development, and I'm very happy that there's guys like you that we're working everyone with their own focus, and together we keep the development going and going. And of course, not every system is perfect from the go, but that's the way that we improve this whole ecosystem. Nonetheless, if it's custodial or non-custodial, I think that both will be necessary. But yes, there will be regulatory challenges and so on.
All right, looking around if I see hands to ask a couple of questions if you want. Maybe we covered everything. All right, we have one here. Let me get you the mic.
Hi guys, Analog Dog on Noster. Should we be prioritizing Bolt 12?
Great, Bolt 12. What is Bolt 12 quickly? It's a major improvement to many things that LNURL does, right? Like, but Jesse, I'll hand it over to you because.
Yeah, Bolt 12 is more like a Lightning native way of doing LNURL. So, yeah, the main gist of it is you would be able to have a static QR code for an invoice, because right now, if you have a Lightning invoice, it's only usable once. And it's a terrible user experience, to be honest, these Lightning invoices. But Bolt 12 definitely makes it a lot better. And I think we should be prioritizing Bolt 12. Personally, I'm of the opinion that Bolt 12 should only have the payments part. There's a lot of extensions to Bolt 12 that you can do, and there's a recurrence, and there's a bunch of stuff in there. But it's already been cut down to the essentials. And I do think Bolt 12 will eventually become a good standard. And people are starting to adopt it, by the way. So it's slowly getting prioritized. Also, LND is now working on Bolt 12 support.
All of them have now, like Core Lightning has it, Async has it, obviously LDK has it, and there is a LNDK extension for LND runners, I think. So it's just a wallet developer, like the pressure the wallet developers, guys, okay? Go to their wallet developers' GitHub and make a feature request or a bug report, even better, like your wallet doesn't have Bolt 12. And share that link on social media and tell all your friends to pile in. All right, this is really making a difference.
It's a bit of a chicken and an egg problem too, because if the recipient doesn't take Bolt 12, for example, well, you can't pay with Bolt 12, and if the payer doesn't pay with Bolt 12, then you can create as a recipient the Bolt 12 invoice, right? So yeah, there's a bit of a chicken and an egg, but if everybody just starts using it, we can do it.
Cool. One more question. We have time. All right, Ben, let me get the mic to you.
Just because I didn't hear anyone mention it so far, you were talking about the fact that with Lightning you always need to be online. I'd be interested in your thoughts on Hedgehog, if you have any.
Wow, brand new cutting-edge Lightning tech question. Super testnet's Hedgehog proof of concept that was demoed a couple of weeks ago, I think. We touched on it yesterday at the BitDevs. Who wants to take that one?
Yeah, I've got an opinion on Hedgehog. Yeah, so what Hedgehog is, maybe as a short explainer, is like it's sort of like a payment channel, almost like Lightning, but just with two parties. So you have two parties that have a channel together. There's not like the network kind of thing that you have in the Lightning network. But the main feature of Hedgehog is that it's asynchronous. So the sender and the recipient don't have to be online at the same time. So you'll be able to send someone funds by sending them an email, for example. And that sounds very promising, and it's very lightweight. Yeah, I do wonder, like, in the end, which two parties are going to actually be exchanging funds together this way. it could be useful. I guess there should be tools built on top that are actually useful. And then again, like, why not just use Lightning, right? Because Lightning is already there. Yeah, and it's probably going to be major institutions that may want to open a payment channel together, and they would have the resources to be online at the same time.
All right, that's it. I'll give my outlook too. I'm super fucking bullish, especially seeing here how people are using Bitcoin as money here in Arnhem. I had so many payments and none of them failed. Like I can't even remember the last failed payment I had, to be honest. But I think we have many great tools, and we need all of them. And just one request, like, if you make sure to know what kind of wallet you're using, like, never use a wallet that you don't know what kind of wallet it is. Make sure it's open source, ideally. And if you have to use or recommend a custodial wallet, make sure it's one that can be trusted, because trust is required there. And I'll leave it at that. Thanks, everyone. Give a hand for the panelists.